Thank you for tuning in today. While we would discuss two pretty large situations within the freight market. Yellow, of course, a struggling LTL company right now that we're going to dive into. Craig's going to help us get some insight here. And as well as UPS, also probably one of the bigger impacts, I'd say macroeconomically speaking. So first off, I just want to get things started here and set the table for those of you that may not have been following FreightWaves.com, as we've had lots of articles put up there about the Yellow situation. Yellow, of course, the third largest LTL provider in the United States. And the situation is that financially they have been struggling for probably the better part of a decade, if not a little bit longer. And even now, even as some of the other LTL companies, unionized and not, have kind of come out looking a little bit better. Yellow is now on the verge of a collapse, and they've missed one payment, I believe, and they're on the verge of missing a second payment into their health and welfare pension fund. And this is subsequently provoking the union to threaten to strike, which may happen as soon as Monday. Now, if this occurs, this could lead to a big fallout in the LTL market specifically. I don't know what the impacts might be in the greater truckload market, but for that, let's go ahead and dive a little bit deeper here with Craig. Craig, I want to ask you, what do you think, how has this situation evolved, and how do you think this is going to manifest in the greater market?
So I mean, in the last really 3 months, we've sort of seen this evolution of the narrative between the Teamsters and Yellow really get pretty, I mean, it feels like a really violent divorce of sorts. I mean, imagine the most sort of, couples that have gone through this really big, that have been together for a long time, are now, looks like they're divorcing. At least that's what they're saying. Unfortunately, neither of them can sort of truly, the employees that are affected can truly divorce themselves from the situation. And that's an unfortunate reality. But the Teamsters organization, I think it's sort of back to how we got here. So this is really a foundation. You talked about we've been in this situation for over a decade. I would argue that this is actually caused by, back in the mid-2000s, Yellow, led by Bill Zollers, rolled up the unionized LTL carriers. They rolled up Roadway, they rolled up USF, Redaway, Holland, into Yellow, which became YRC. And in the process of doing that, took on a lot of debt. And then in 2006, there was a freight recession that actually was about 2 years before a financial crisis that took place in 2008. In 2009, the company almost filed bankruptcy, but this is a different climate. Jimmy Hoffa Jr., which is the son of the founder of the Teamsters, worked diligently to really save Yellow, Roadway, or the YRC business, and really brought the Teamsters in on this process of saving the company. And they actually took a lot of this over the course of a couple of years, actually took it on the chin, because they gave up a lot to really help the company out and have done over the last decade. And that's why a lot of this resentment exists, is that the Teamsters, rightfully so, during the financial crisis, knew that Yellow could not survive with all the debt it had accumulated, worked to give up some things to help the company survive. Now, one could also argue that the Teamsters also, throughout that process, really prevented a lot of the consolidation and operational efficiencies that Yellow should have gained as it consolidated those businesses. But the resentment comes back from what the Teamsters feel like they gave up to save the company. But what we also are dealing with is the fact that now Yellow's management, and probably over the last couple of years, have really been frustrated with the fact that they haven't been able to consolidate their operations and really take 3 different businesses into one. And so there's really there's arguments on both sides of the table. And the fact remains that Yellow's cost basis, because of its sort of union structure, is much higher than its competitors. Its rates, because it's not viewed as a high quality carrier because of some of the performance of its business, its service, it doesn't have the flexibility to respond to the volatility of the market. Like a union shop isn't the way they've built the business and the way their contracts are built with these 3 different operators, 3 different businesses, does not have the flexibility to respond through these cycles the way, people have argued that, well, it can't be just a union problem when ArcBest and TFI have done well. That's true, but they don't have 3 different individual companies that they have to contend with that have different sort of structural elements and operational elements, they're not getting the consolidation.
Yeah.
So the Teamsters do have some quote unquote blood on their hands in this. They are somewhat responsible and have created operational issues. But to the Teamsters' credit, they also have given, over the years, they have also given into helping Yellow survive some of these near-death experiences, and this is all sort of catching up. And now we're in a divorce where both parties are aggrieved, and they're rightfully so, and depends on which side of you can make arguments on both sides of it, but the fact is that the company probably will not survive. And the reason it will not survive is that Yellow did not make its payment, its pension payments top up that was due at the end of June. Mm-hmm. It defaulted. It has, in its contract, the Teamsters, if there's any default of that or they're not making pension payments, they have the right to strike, and they have exercised that right. And here's the reality of it, is Yellow has said they're not going to top it up, mm-hmm. and they don't intend to pay July, and they don't intend to pay any more pension payments until after they get some financing arrangements. At least the intention, right. They didn't say the last part of it, but that is the intention, is that they don't intend to actually pay anything until they get capital. They have $100 million of cash left at the last 8K filing they did with the SEC. That pension payment would be $50 million. That's half the money gone away. Mm-hmm. The company needs a certain amount of working capital to survive. It clearly has made a decision that it does not have the capital to firm that up. And therefore, we're going to potentially see a strike next week. And if they strike, the company will not survive, in my opinion.
Yeah, so basically, it sounds like, to me, in a nutshell, is, and I didn't know this at the time, I had no idea that Yellow had, I knew Redaway and all that had, they were part of the Yellow umbrella. I had no idea that they were operating as separate entities underneath that umbrella. And for those of you that aren't familiar with LTL, that is extremely inefficient.
Very much so.
Because there's networks within networks. LTL needs freight to survive. It's kind of like the blood flowing through the veins of an LTL network. If they don't have enough freight in one area, they need to move it around to make it happen. And if you have 3 different networks to manage, and then you've got a union and then executive management, there's a lot of bureaucracy, a lot of noise to work through there. So is this a situation, Craig, where basically the union put a Band-Aid financially on this company but didn't really commit to solving the underlying problem?
I think we have to be fair as possibly we can about what happened in 2009. Is the union, think about this, mm-hmm. unemployment was something like 18% at some point during, this is the financial crisis, this is one of the worst economic crises in American history, at least in the last 100 years. And everyone was fighting to save everything at that point in time. This was a pretty profound moment in history. The Teamsters knew that there were no alternatives for them if Yellow shut down. In other words, it wasn't as if the people could not have gotten those trucking jobs. I mean, this was a pretty big crisis. They worked hard to save the company. It was in their interest to do so. Right. We're in a different climate today. Because we're in a different climate today, the fact is that those jobs, while unfortunate, the vast majority of those folks will be able to find alternative employment. And that's really just because of the really tight employment market that we exist in. And so it's a very different situation. But a lot of that sort of, what's happened is the Teamsters have seen that not necessarily that Yellow has performed well, but all of their competitors around them, the non-union shops and frankly the union shops, have performed better. The pay scales are better, both in union and non-union shops, and they have felt like because they had given up all this money and resources to effectively save the company, that they feel somewhat, this tension, this anger, and this sort of frustration has manifested itself over many years. It would be almost as if you had done something to save your marriage, and the whole time, the way you feel is that your spouse was not a good partner the whole time. And the partner on the other end, your spouse, feels exactly about the same way about you. And this is a divorce, and it's a violent one in the sense that it's all public, and its consequences are quite serious. There's 30,000 jobs, approximately 30,000 jobs that are going to be put out of work. Unfortunately, a company that's been around almost 100 years is not going to be around any longer.
Yeah, so let's forward up a little bit to this, divorce. So over the last few months, Sean O'Brien, the head of the Teamsters, that's been very vocal.
I mean, by the way, he has a very Donald Trump style.
Extremely.
Like his Twitter handle is Teamsters SOB.
Right.
But he's very much like what you would imagine as an old, like...
He's an agitator.
Like probably the way I think of like how Jimmy Hoffa probably was. Like, and he has a legacy to build.
Yeah.
Like the difference between some of the other sort of Teamster leaders is, he is in the Teamster culture. The Hoffas are sort of regarded as these sort of like great founders of this union and sort of great leaders. He has to build a reputation for himself. This is a political job as much as it is.
And that was going to be my question. Is this more of a political maneuvering? Because when you're talking about 22,000 jobs or 30,000 in total.
Well, 8,000 are not unionized.
Right.
And those are sort of, unfortunately, we can call them victims because everybody's a victim. It's not as if they're one different than the other. But they're certainly not, they don't have a sort of stake in the Teamster fight, if you will, whereas the Teamster fight people absolutely do.
Yeah, so is this a situation where he's kind of forego, and I read some good articles, Rachel Premack, of course, has written a few very good articles about this. The sentiment here seems to be that it doesn't make sense for him to just forego the 22,000 jobs, union jobs, because we know that they're probably not going to show up in another...
On the surface, it doesn't.
Right.
But I've been unpacking this for the last
let's hear this.
month.
Okay.
And I've been talking to a lot of the LTL executives across the space that are really close to the situation. I've talked to many of the people that are involved with competitor operations, people that have been in the insides of these organizations throughout the years. And I've sort of compiled an understanding of what's going on. So the situation is this, is that Yellow is out of cash.
Right.
There is no doubt about that. In fact, if you look at their press releases, unusually they've come out and said that. And that's really what has become pretty profound is it's a publicly traded company that basically has said, if we don't solve this problem, we're out of business. A very unusual statement. The Teamsters have also piled on that sort of story. But Sean O'Brien, he has built a reputation, or wants to build a reputation and name for himself. And needs some really big wins. The problem is saving a dying company like Yellow, who has really not been able to get out of its financial crisis, no matter how much money and concessions have been provided to it over the last 15 years, just doesn't look like it's going to survive. The federal government, when Donald Trump was in office in April of 2020, this is during the COVID crisis, provided $700 million of financing in the interest of sort of national security was the argument to save Yellow. That capital is really propped up Yellow and saved it from an imminent bankruptcy back in 2020. So fast forward to where we're at. The fact is that the company has had multiple opportunities to save itself, but yet still can't. So if you are the Teamsters, if you're running the Teamsters and you're Sean, you're not going to get a ton of credit for giving up concessions. And you know that your membership, your rank and file membership, resents all of the things that they think they have given up over the last decade. So he's not going to get a lot of credit. But there's something bigger going on right now at the Teamsters. UPS's strike, which is next potentially 2 weeks from now, potentially, is also, this negotiation on this contract is a much bigger outcome for them.
And a company that is much more financially secure.
UPS is going to say, UPS will survive a strike.
Right.
Like it's a $100 billion company that is immensely profitable. It's a world leader, and it lives in a much different market than what Yellow does.
Right.
It will survive. A strike could go on for 3 months, and it would come back roaring back. Like, there's no doubt about it.
Right.
Now, there may be some consequences to that, and there may be a cost to do that, but there's no doubt about its survivability. So if you're Sean, and you want to make a name for yourself inside this organization, and you want to sort of show that you are the next great leader, sort of like what we see in China with Xi, is that Xi has done these things because he doesn't want to be viewed as just another leader. He wants to be viewed as just as good as Mao. And this is, in many ways, what Sean O'Brien, I think, is doing, is trying to look just as good as Hoffa. He wants to be at that tier. He has to make a play here. And his play is UPS. The grand prize is UPS for him. The grand prize is also Amazon for him. And so if he can prove out that he has successfully won all these concessions from UPS and prove out that because he's willing to let a company go under, that sort of this level of I understood that this cost me something, but I gave this up to achieve a higher goal, a different standard, then he certainly has the opportunity in future negotiations to win. The second sort of thing you sort of have to consider is that Yellow's contracts are actually far, in terms of incentive packages, what we have understand, are not as lucrative to the employees as what the other LTL. In fact, it's sort of the low end of the market for these other LTL. And it didn't used to be that way, it's changed.
Right.
And so because we saw ArcBest contract just get reset, the TFI contract just got reset and renewed, those contracts are better. And in some ways, getting rid of the lower end of the spectrum gives Sean O'Brien a much better argument in future negotiations that union jobs, quote unquote, provide better benefits and pay more. And so really we're in a situation where the Teamsters, led by Sean O'Brien, have a lot of incentive and a lot of desire to basically create a resurgence and a reemergence of sort of a modern union environment. And unfortunately, Yellow in the world of sort of the market is not viewed as that sort of successful modern company. It is a dying company. And if you're the Teamsters, you want to be associated with UPS and ArcBest and TFI, you really don't want this laggard who's actually bringing you down in their mind. And that's the unfortunate reality, is that they've written it off. And I'll tell you why I believe they've written it off. This is something that hasn't been talked about enough, but an executive pointed this out, and I was like, you're absolutely right, is the Biden administration actually, so the Trump administration bailed out Yellow with a $700 million loan back in 2020. The Biden administration did something much bigger. They gave a $36 billion payment into the pension plan to prop it up under this Build Back Better program under the Biden administration. The pension plan that we're talking about that has not been propped up. So now the pension plan is safe. And that's what the Teamsters really cared about, is if Yellow went down and they couldn't prop up the pension plan, that potentially that pension plan would fail. So now there's no stopgap. There's this massive stopgap to protect the pension plan. And if that's what the Teamsters care about most, that's what they care about. Sean O'Brien knows that those jobs will end up, likely Teamster jobs will end up at other Teamster operations. That, UPS is hiring. It's a great job environment. At some point, UPS will hire, right? Probably not for the next week. ArcBest, they'll be able to get jobs at ArcBest, TFI. And there's a lot of question about, whether or not there's this sort of massive incentive for Sean to sort of walk away from Yellow. And I think that's what we're dealing with, is that for him, he's focused on a much bigger prize in his mind. And he's written off Yellow. And the reason I know he's written it off is you go to his Twitter feed, he's a very prolific tweeter. Right. From one person to another. He's not talking about Yellow. In fact, he's only, on June 24th, he actually tweeted a tombstone of Yellow. And then on June 27th, when Yellow sued him and filed a lawsuit, or sued the organization, not him, he tweeted a response to a video that they put out where a lot of the pressure's on the Teamsters. So he is focused on UPS. That's the grand prize. They are largely have written this off. They will strike, and I don't think he has any choice but to strike. Right. He will lose an enormous amount of, the Teamsters will lose an enormous amount of credibility to their UPS negotiation if they don't follow through. And so I think it's inevitable that they do strike on Monday and the company does not survive it. And the reason the company won't survive it is, keep in mind that they still have all those expenses, but they won't have any revenue. This is exception of some parts of the organization, 90+%, if not 98% of their business is union labor dependent. So when that business shuts down, then there's no way they can survive it. Now, here's the other sort of thing, and I know that you have some questions to ask, but we're going to look at a thing I'd point out is what's happened over the last week is very similar to what happened to SVB. As everybody's reading this narrative about, okay, it's shutting down, and anyone who's ever been in a trucking shutdown knows that the last thing you want is your freight on a truck or on a dock. Right. These facilities will be shuttered, they will be unmanned and unsecured. And we know how bad the criminal element is in these sort of just in manned retail, these offices, these offices and terminals become prime targets for people to go steal and pilfer freight. That freight will end up on eBay. And so if you're a shipper, the last thing you want is freight running through the Yellow network. It makes sense for you not to basically pull your freight. And so we've heard that. Uber has publicly done it. I've talked to a number of CEOs of very large 3PLs that move freight through Yellow or Yellow's customers, and they've cut them off in the last 24 hours. TMS systems have pulled them out. So it is clearly, numbers that were given to me was that their bill of ladens, if you go back a couple of weeks ago, were as high as 50,000 a day. And what I was told as of last night was it was about 25,000, so about half. And the person who had really good inside information said that they believed it would be sort of high teens by the end of the week. So.
Yeah, I mean, and
that is assuming that it even.
Well, that sounds like that's even without the strike. That it's almost like the days are.
But it is now. I mean, the strike is the reason no one wants to do it. And I think if it was a strike and people felt the company would come back or there would be some resolution, that's different. Nobody really wants their freight stuck in a network, period.
Right.
But even more so when you don't think the company's going to survive, it makes sense to sort of pull freight from your network.
Well, let's talk about the impact of freight. I mean, let's pull out of the drama here for a minute and talk about the impact of the overall freight market. Now, like you said, shippers are already diverting freight. We know that, and it's showing up in the numbers. But how does this manifest itself in the freight market, LTL-wise, for now? And would it be better if Yellow just decided to go ahead and shutter instead of prolonging this cycle?
So the question has been, I want to answer the last question, I want to get to the market things. Why haven't they just shuttered? Why don't they just file bankruptcy? And I think a couple of things have been pointed out to me is management is, if you're a business, you do everything you can to survive. That's your only goal as a fiduciary, is to survive. And so really at the end of the day, they are hoping that there is some white knight that shows up that bails them out. I don't think it's happening. Government has done it. Could be an investor. Apollo Group has a lot of investment already in it. Could they top it up? Could a TFI all of a sudden show up and Art Best show up and buy it? That's why it has not filed yet.
Right.
The reason they haven't made payments is these are unsecured they're an unsecured creditor. So why would you give up money that you frankly don't have to give up in this deal with bankruptcy? So that's the background why they have not filed yet.
Okay.
They will wait until the operation shuts down. They probably have been preparing the bankruptcy filing.
Right.
But what does this all mean? I mean, so one of the questions is, we're talking about a company with 10% of the LTL volume, or at one point, maybe a month ago or 2 months ago, had 10% of the LTL volume. It's a pretty significant organization, providing a significant amount of capacity. What I understand in talking to other LTL carriers is they believe that there is sufficient capacity right now in this market across the freight economy to handle the volume, with one exception, and that is the long-haul LTL business it was the retail long-haul business that it was Yellow's bread and butter, that cross-continental stuff that was largely retail-based, is where there's going to be the most disruptions. The good news about that freight is that's the very freight that intermodal and truckload, spot market, or even just over-the-road contract truckload, is incredibly well-positioned for.
Right.
And that freight will probably end up on a national carrier like an XPO or a FedEx that can buy incremental purchase transportation services from the truckload market, so there will be some impact. So the answer is, I don't believe so. We have to move that freight from the West Coast to the East Coast, but because of the sort of infrastructure that exists out there and the fact that the freight market is incredibly soft, means there should be ample capacity, unless UPS strikes.
Unless UPS strikes.
But short term, the answer is there should not be a problem for shippers moving their freight.
Yeah, well, it may be some heartache in the near term, right?
A week.
Yeah.
Well, no, you're right. I'm sorry. There is, routing guides change. What we've been told is a lot of the LTL carriers are not willing to make discounts.
Right.
We've heard that LTL rates across the board will go up anywhere from 9 to 12%, because Yellow was a cheap player.
Right.
Even if you don't actually see the LTL providers increasing rates, you will see an index go up because the average goes up. But the reality is that you are going to see a substantial impact to.
Well, I have a chart for LTL rates prepared just to kind of illustrate what we're talking about here. Of course, this is based on some invoice data, 14-day lag in the invoice data. And you can see LTL rates have a pretty regular cadence. They increase every single year. Market soft, market tight, doesn't necessarily matter. It only matters is the scale of the increase. So if you look at the current year here, and I want us to get your take here, Craig, is we're looking at our LTL rates, average hundredweight per mile, so mixing can have a pretty dramatic influence in this data set, but the trend line was coming down into June. We were seeing those LTL rates finally start to come down and correct down after, trucking rates have been coming down since last June. Mm-hmm. But LTL tends to lag because of the absolute concrete nature of the negotiation cycle. Now they were coming down. Now it looks like they're trending back higher.
Well, it's also, think about a shipper's cost center. It's only, in most cases, probably 10 to 15% of their transportation costs.
That.
Of trucking transportation costs. Like it's a small piece of the pie. You focus on truckload and ocean because those are the big grand prizes. If I'm going to tell you to cut cost, I go there first. In the LTL business, it's a small thing. You don't worry about it until later in the cycle, which is one of the reasons that there's less pressure on LTL rates because it's not going to get the attention. The second reality is that it has far greater sort of moat built into the economic model because you don't have this boom and bust cycle that exists in it. And that's why perpetually these rates tend to go up. They have come down because the LTL carriers, really since the fourth quarter, have been aggressively trying to fill these trucks.
Right.
And now we've seen them aggressively discount to fill them. But that's not the case this week. In fact, some of the channel checks that I've done is that we're starting to hear and see, or we're starting to hear that some of the LTL carriers are putting some rate increases on some of their volume. And even have heard that some of the LTL carriers are refusing to work with certain shippers that had pulled freight from them in these renegotiation cycles as a form of punishment. Now, I don't know how ubiquitous that is, but those are sort of discussions that have been taking place. I suspect that it's all a money thing, that everyone can work together when this is the right price. But there is some of this stuff being thrown around right now, is that some of the, we talk about shipper's revenge. If you're an LTL carrier, this is an LTL carrier revenge opportunity that I'm sure that they will get their opportunity. Now, the question is, how long will this happen?
Right.
The state of the freight market is still, this doesn't change the fundamentals of the freight market, but it does sort of prove the conversation that we've been having about this bloodbath or this great purge. Yellow is sort of the big headline carrier. This will be the largest trucking bankruptcy in history.
Right.
This will be the big headline carrier of the great purge. And it's unfortunate, but we're here.
Yeah, and I want to pull up the next chart here, LTL versus van rates, just to give an idea of how these two relate to each other. I talked about how the dry van rates and truckload, they move faster. They move quicker than the LTL cycle does. And the van rates have been coming down since June, and the LTL rates, actually have been progressing higher throughout the spring. And once that occurred, if we have that chart, LTL versus van rates, it looked like the LTL rates were going to follow suit. So with this same logic in place here, and we may not have it, but with this logic in place, do you think this would be a sustainable increase to the LTL rates?
Absolutely. The question is, are we at the bottom?
Yeah.
And there's a lot of reasons to believe that things in the freight market are not certainly going to turn up. I think the argument is about whether we're at the bottom. And there's arguments, I think there's a lot of folks that believe, at least in terms of sort of the capacity build, that we probably are. And so we could be trading on the bottom for a long time. Just because we're at the bottom doesn't mean it's going to get better. I think, frankly, we're going into the second half, which is always a better calendar, but it could be soft. I think, frankly, this is probably likely the bottom. I don't think we will see LTL rates with Yellow leaving the market, 10% of the capacity leaving the market. I don't certainly think we're going to see any major issues in terms of further financial pressure. It's going to remove enough capacity out of the LTL market to really matter. One of the questions that I've been trying to answer, and you're an LTL pricing guy, so I should be asking you these questions. I'm giving the background, but Zach, one of the things that I've been, you spent 10 years in LTL pricing?
Yeah.
Yeah, so you worked for a company that used to be owned by Yellow.
Yeah.
Maybe Roadway owned it also at one point?
No, No.
It was all Yellow. It was Yellow.
At some point, I believe.
They own. They were. I mean, this was like the
Yeah.
Sears. I shouldn't use that company.
Right.
It was like a big company of our day. The question I've been asking is, what has happened to the truckload market? How do we translate all that LTL volume? So we know it's $5 billion in freight. That's the run rate it was at. How much of that freight would incrementally add to the truckload industry? It's going to flow into the LTL business, but what is the impact of that? So it's hard for me to know. Do you have any sense of that?
Yeah, I mean, so all LTL moves truckload for the most part.
Right.
Like most people don't know this, but LTL gets consolidated. All LTL providers are doing is consolidating things into truckloads to ship them long distances or longer distances.
So how do we translate the LTL volume into the truckload market?
So subsequently, the reason I asked you the question about, is Yellow is it actually more of a pain point for Yellow to hold on versus just go under, is Yellow's tying up their network. And while shippers are diverting business, then that is going to have to go into other people's networks slowly, but they're not going to have access to the same amount of capacity. We've talked about it. Capacity is loose, relatively loose in the market, but it doesn't mean that all of a sudden these LTL providers have the network to just take on 50% more business overnight.
Correct.
And they're not committing to building the infrastructure out because they don't have a definitive way of knowing that Yellow isn't going to somehow, like you said, white knight showing up. So for me, I don't know that this is going to have a meaningful impact to the greater trucking market, because I think that it will be a slow, that stuff's just going to get frozen. It's going to sit there.
But Walmart apparently was a big customer.
Yeah.
Walmart supplier network is a huge customer.
It's going to flow into other avenues eventually.
But Walmart is starting to reroute freight, from what we understand. They told their suppliers to stop sending them freight through Yellow's network. That freight is now entering other LTL companies. The problem is those LTL companies, as you said, they have a finite amount of capacity. They can still buy purchase transportation.
Right.
Do you believe that the LTL networks can flex up to absorb that?
They can, but it takes them, it's not a long-term situation until Yellow goes under.
But okay, because they don't want to make long-term contractual agreements unless it's more certain.
And those trucks are not in position. We've seen it on the West Coast.
There's a difference between buying a truck.
Right.
Like the local P&D guys that do the sort of in-city routes.
Yeah.
Is sort of one side of the LTL business. But a lot of what we're talking about is the line haul services, right? On the line haul services, every LTL carrier I know of, unless they're really tiny, have some form of purchase transportation available to them. They will buy that capacity from a line haul carrier that can run between cities.
I'm going to answer your question with data. So let's pull up the OTRI, the Outbound Tender Rejection Index, because we know that this has been happening for a month now, if not longer, and shippers have been diverting. So they've been doing this anyway. If this were having a meaningful impact to the market at all, the OTRI, in my opinion, would start to kind of pop a little bit.
I mean,
and it's not necessarly doing that.
But we've been told that Walmart for months has been planning contingencies, or at least for a month. And this was information that we had gotten a couple of weeks ago, and it was end of June, I think. Anyways, so they've been making these contingency plans without executing on them. As we understand, they executed them as of yesterday.
Okay.
So I don't know how much of there certainly has been some erosion in volume, and you can see that in the year-over-year LTL numbers. I mean, Yellow was one of the companies in its interim reports, volume reports, that showed one of the largest degradation in volume of any of the LTL carriers. So we know that they've been losing some volume, but I don't think there's been a wholesale run on the bank situation until this week. And so because of that, I don't know that it has. But to your point, even if it was, the LTL companies can absorb that volume until it does go under.
Right.
Now, when it does go under, the LTL players will be forced to buy capacity.
Right.
Now, one thing I'd like to point out, because this is confusing to a lot of people, is when a truckload carrier goes out of business, that capacity, those drivers, they effectively stop servicing that company. But the equipment gets sold off at auction, may take a couple of weeks, maybe a few months. The drivers quickly find new jobs, trucking jobs, LTL is very different than that. When an LTL carrier shuts down, to your point, the docks that are part of that play, there's a finite amount of infrastructure that's out. Those docks don't all of a sudden get replayed. They may sit at idle indefinitely in some cities, especially if you're in a city where an LTL company already has a huge dock network. They're not going to buy another one. So that dock capacity goes out. Those dock workers who can go find work in other parts of the economy very well may leave trucking altogether. The drivers may leave trucking, or they may go find other trucking jobs. The reality is that when you lose an LTL carrier, it's quite different than losing a truckload carrier. That capacity in truckload gets soaked up by the rest of the market. That does not happen in LTL. So it will take many years, if we were in a market that was strong, like say a year ago, and this were to happen, then I think the circumstances for shippers would be far more dire.
Oh, for sure.
Because they would be scrambling for capacity and really hurting for it. In a situation like we're in today, where the economy is, the market should be able to absorb it. And because the market will absorb it, they will incrementally add capacity as they need to and resources.
Yeah, I agree. I think the sense of urgency right now for a shipper is not there to create enough of a disruption. Now, I'm not saying that there's not a sense of urgency.
On Yellow.
Yeah. Now,
but there is a much bigger story.
Yes. So
this is the Teamsters.
Yeah.
If FreightWaves had a man of the year, not because we're necessarily giving him, Time Magazine does the man of the or the person of the year now.
Right.
For anyone who's a part of the story. The story of this year for trucking is certainly the Teamsters and Sean O'Brien. Sean O'Brien is really the Teamsters strike on UPS will have a incredibly profound impact on the freight market if it actually takes place. And so they have been trying to get this to contract negotiated for some time. The union has won some concessions, but they have not settled on the contract, and it's still in contention. And so we will see
the scale of UPS's impact.
It's a $100 billion company globally. By estimates that, back of the envelope numbers, 70 billion of that is in the United States. There's domestic. Now, there's a lot of question of how much of that is truly truckload and how much of that's managed services. But there's $70 billion approximately in the U.S. market. Some of that's exports and stuff too. But it's a big number. It's effectively, the UPS number rivals the U.S. Postal Service in terms of size and scale. It's a massively impactful thing. We have seen this happen once before, at least in my lifetime. In 1997, UPS went on strike. And anyone who lived in trucking in those days talks about how just chaotic it was. But it was a massive, massive gift that everyone who was in trucking when I was learning freight sales and was talking about, the UPS strike, It was a massive, important driver of volume and disruptions and volatility. And so that will happen. But one of the things to keep in mind is UPS was a much smaller company. E-commerce almost didn't exist in 1997. Amazon was 3 years old or something.
So absolutely. So yes, that's the question that I think everybody's wanting to know is, okay, so let's run through the gambit here and say UPS strikes. What happens to the trucking networks across the United States? Do you think this OTRI number that I just showed you jumps up?
I think you could see some of the highest levels of OTRI that we've seen. Will it rival 2021, where we're at 30%? I don't know that. I think in certain markets it certainly will. And the reason is that so let's think about what happens. A lot of what UPS moves is parcel. They're not moving LTL freight, so let's put that as a factor. I think it's at least as far as I'm concerned, it's a foregone conclusion about Yellow's pace.
Right.
Short of a miracle that's unlikely to happen, in my opinion. Yellow's going to shut down. LTL carriers are flooded with freight opportunities. And then UPS shuts down. Then what's going to happen is all that volume is going to immediately show up over at FedEx, at the U.S. Postal Service, and at some level, DHL's sort of network. They simply aren't going to have the capacity. They're going to be buying a lot of line haul capacity, and they won't even have capacity at their docks to handle it. We're talking about a massive, massive, massive catastrophic amount of volume across their networks. And because they won't be able to fully handle it, it means that shippers will be forced to really take control over some of their own routing decisions. It means some of that LTL business, some of that freight that's currently in LTL will start to get, so parcel sort of moves up
Yep.
into some of the LTL shipments. LTL will get bumped up to truckload.
Exactly.
And all of a sudden we see this flow in. For truckers, you are, for the next week, you are a teamster. Now that is antithesis. It's like saying somebody who's went to Alabama, War Eagle. Like,
Yeah.
you don't say that. But for the next week, if you're a trucker and you don't work for UPS and you don't work for Yellow, you're a teamster. And the reason I say that is you want UPS to go on strike. Nobody wants UPS to fail. Nobody does.
Right.
But if you're a trucker and you're wanting to create volumes across the market at levels that are unprecedented, then this is something that you absolutely want. And so you want a strike, and you want it to be something that shuts down UPS's network, and then shippers are going to be forced to just scramble for capacity. And we're going to see that OTRI number all across the board accelerate because tender rejections are going to happen. Because what's going to happen is a lot of that freight, the people who are willing to pay, and we know who those companies are that are willing to pay, the same people that paid 2 years ago are going to be forced to pay up for capacity. And in the process of paying up for capacity, it's going to go to the highest bidder because these quote-unquote contract rates are not going to matter.
Right.
Spot market is going to be electric. Now, not everybody's going to get to participate in parcel because parcel is a high-value product. It's not as if someone's going to take their parcel volume over to just some over-the-road spot carrier. But the bigger carriers that can handle that called zone skipping business or consolidated business are all of a sudden going to end up in a situation where they prefer that freight. And the stuff that they've been fighting all these small spot market carriers, all of a sudden, guess what? All those hay loads and all those loads that nobody wanted, those beverage loads that everyone's sort of fighting for right now, that a year ago none of the big carriers would call for, all of a sudden those are fair game. This is what's going to happen. And I think if we see a strike, it will be a profound event for carriers. And for shippers, they just have got to figure this out. I mean, unfortunately...
Do you think it's too late for shippers that don't have contingency?
There was an article Mark Sullivan put out today that said, if shippers have not figured it out, it's too late. I think you have to have contingency plans.
Right.
I think one of the things to keep in mind that it comes to UPS's network, and this is true for FedEx, it's true for the U.S. Postal Service, is we think of, most people, including me, when I think of UPS, I think of the brown truck that shows up in my house that drops off the boxes that my wife orders, which is pile it up and stuff, right? That's what I think about with the UPS. But UPS's network is quite different than that.
Right.
UPS runs what they call a lot of zone skipping. They call it something else, but it's effectively zone skipping, which is consolidations where they essentially drop a trailer at a company. It may be purchase transportation, it may be labor. And they drop it and they fill up and they don't go direct to that sorting facility in your local city. So in Chattanooga, let's say, that they may load it up in Chattanooga and that may be trucked over to the West Coast.
Right.
That zone skipping business basically enables them to save the shipper to save an enormous amount of money. The problem that you get is if that sorting facility on the other end is shut down because of labor, there's nowhere to send that freight to. And so we're going to see a situation. Now, put it in perspective, UPS has about 30,000 tractor trailers. They have they have 100,000 trailers. And so they have a massive network. Now, I've tried to sort of guess or sort of back in, can you translate a tractor trailer on UPS's network into a truckload impact into the trucking market? And that's one way to think of it. And I've come to the conclusion that that's not the right way to think of it. And the reason I think about it is it doesn't address all of the customer inefficiencies that will exist. And so I think you actually see a multiplier of not just 1-to-1, but it's probably a 3 to 5 to 1. And we haven't even talked about the intermodal traffic. UPS is if they're not the largest intermodal carrier out there, I think
they're the largest.
The largest intermodal customer.
Yeah.
They are, the trains have built these high-speed trains for UPS.
Right.
The railroads have built these cross-continental trains specifically for UPS. So they're using a lot of freight, and they don't have to do that to Teamsters.
Right.
The problem is there's nowhere to deliver those packages.
Nowhere to put it. It's going to pile up.
It's going to pile up. That freight is going to get rerouted. Like I said, it's going to get rerouted to their competitors. If I'm a shipper, I'm going to the U.S. Postal Service. And I'm going to tell you why. Under government mandate, federal law, the U.S. Postal Service has to be there for you.
Yeah.
Like they will do it, and Congress can certainly intervene if they wanted to in terms of budget or whatever. I don't know if they will, but the U.S. Postal Service is probably the better answer than FedEx.
Well, all of these trucks, I remember back in the day when I first started at U.S. Express, way back when, you gave a talk that said, all these trucks, this capacity, it all goes on the same thing. The U.S. Postal Service uses the same trucks that UPS
they
does.
contract line haul services through their competitors.
Yeah. So I believe it was it's about 15% of UPS's line haul network is outsourced. 15 to
I think
20%.
at one point, and I don't know who has the latest contract on it, but USPS was actually using FedEx's network to run their line haul services. You know, Amazon is one of UPS's, if not the largest customer, but they also run their own competitive network.
Right.
And so we're in a situation where they're just like, remember, let's take the fundamentals of what we've always talked about, which is freight's a commodity. There's a finite amount of supply and demand. What we're talking about is taking off an enormous amount of supply. And if you've ever studied supply chains, and anyone who really understands it would appreciate this, it is not so much the capacity itself that's the problem. It's a cup that I'm filling up and overfills. It's all of the disruptions that happen along the supply chain that actually cause all the distress, because it changes the schedules and the priorities, and it changes, one company's got a competing priority. They have an engineered network around UPS's network, and now they have to make alternatives. Well, that freight that wasn't hot all of a sudden becomes hot. Well, now I have to go full truckload or air freight. FedEx is now bumping my freight because it can't handle the volume. So we're gonna see all these really if this happens, let's just be clear that we're not saying it is. If it happens, we're gonna see a lot of really insane developments and stories that can come from it of companies that have had to deal with these issues that they're just not prepared to deal with. And there's gonna be things that no matter how seasoned you are and how good you are and how long you've been doing it, it's gonna be things that you didn't even realize that you depended on and that you did not anticipate in this. And you're gonna see that your other companies that you do depend on that are not striking are also going to have things that they did not anticipate. Because this is it's an unprecedented event, and I think it's one of the biggest events that happened in freight.
Yeah. So if UPS, of course, has a little bit of time, a few days to figure this out. I want to pull back a little bit here and ask you. Okay, so the freight market is incredibly loose right now. Say UPS, they figure it out and move forward. What are we looking at now?
Well, if they get there, and I think that is certainly the expectation by a lot of folks that is that it's in both the Teamsters and UPS need each other, a symbiotic relationship. They can't frankly survive. Neither of them can survive without the others. So they need each other. This is different than a divorce of Yellow.
Right.
Yellow is the unfortunate casualty of this environment. UPS will not be. And so they need each other. And so the chances of them coming together, it's in their mutual interest to do so. But it doesn't mean they won't strike. And it doesn't, we don't know what's going to happen.
Right.
But I think if it doesn't happen, then what we're going to see is a market that's going to absorb the Yellow volume. And again, short of, Yellow could get a bailout, some miracle. But it's going to absorb the Yellow volume, and when it does, that will soak up all the LTL capacity, available capacity. That will incrementally put a bottom in the market unless we see a further deterioration of the U.S. goods economy. And that's quite possible. There's a lot of reasons to suspect that credit is being stretched. There's a lot of reasons to think that the student loan deferments will have an impact. Those things certainly could take the economy down to another leg. And when it does, and if it causes higher unemployment, then we could see a situation where the freight market could get more challenging.
So UPS strikes, we see another chaotic freight market.
Yep.
UPS doesn't strike, we continue to kind of slowly
I think the Yellow
move
thing will create some disruptions.
Okay.
I think we'll see some incremental volume regardless, because I just think, some of
But
the
a
LTL...
short-lived event.
A couple weeks.
Yeah.
Maybe a couple months at worst case. It's not a long-term event. And a UPS strike is not, I don't think that would go on for months. I think we're talking potentially weeks at the worst case. Like, they can't afford to strike for very long. Neither of them can.
Right. So I want to pull up OTVI real quick before we get to a few questions, because I want to leave a little bit of time for that. Pull up the OTVI, and the demand situation for the freight market, relatively stable. We've been seeing the
It's
OTVI.
boring.
It is boring.
It is boring. I mean,
But we're here talking about
these
UPS and
like
Yellow.
stories. It's like college football when there's nobody playing football. We talk about realignment.
But you see that white line right there is moving at a pretty horizontal level. But normally in July, we talked about it in Cleveland. We thought that this was going to start falling down a little bit. We've got a little bit of stability here.
We have market stability. I mean, look, I'm certainly bearish. I would say I'm still naturally oriented toward the bear category. But the stock market, is doing exceptionally well. It's quite possible. The question is how we bottom. The data is saying that things aren't getting worse.
Right.
The macro picture is sort of cloudy for me.
Yeah.
All these sort of questions, but the data is certainly saying that things are not deteriorating.
And especially with this UPS situation, that makes a big...
Oh, it's huge.
That puts a big range on it.
The reality, we've said this before, Zach, is that trying to predict the future is incredibly difficult. Like, one of the things that we do is we look at data. Data draws our conclusions. When you start making these sort of forecasts based on things that are going to happen in a month, or student loans impacted, yes, it could, and certainly there's a lot of reason to suspect that's the case. But the reality is the data is telling us that the market's stable. That's the answer right now. It's not getting better. It's not getting worse. It is stable. It's boring. And honestly, for supply chain professionals, boring is good. But the thing about freight and the thing about supply chains is that there's always a volatile moment around, and there's always volatility. And the only way you can fend that, the only way you can actually understand how to prepare for that is to have real-time high-frequency data that tells you what's going on. And this is the reason this is going to be really important, because we can look at the national data all day long. We talk about it all day long. It's on our website. I tweet about it all the time. We talk about it in these public forums. You can get national data. And you can even find out what the market's doing on a daily basis by simply looking at our website. The value is knowing on the lanes that impact you, on the lanes that you truly care about, that your job is dependent upon, is knowing what's happening in those markets. And that's where the power of that high frequency data. It's the rate data, it's the pricing data, and it's the tender data. One more thing I would say is this is also creates an enormous case for index-linked contracts, because so the index-linked contracts, Zach, you and I have talked about this, basically is I'm going to settle my freight prices against a third-party index, FreightWaves Sonar Track, and in doing that third-party index, I don't actually have to know what happens. I get completely taken care of. And this is the way every commodity's bought. It's the way diesel's bought. Big trucking companies don't pay the retail price and they show up. They use Opus's index and they say, I'm going to buy fuel on a Opus minus 10 cents a gallon or Opus plus 10 cents a gallon. And basically that's the price.
Yeah.
And that's what makes index-linked contracts. Nobody can predict the price of oil. If you could, you would not be sitting here.
I'd be on an island.
You would own an island. And even the folks at OPEC can't necessarily predict it all the time, even when they're moving the market. The reality is that everybody realizes they have some risk, and the same thing exists in freight. We can't predict what UPS is going to do. I don't even think the Teamsters know what they're going to do.
Yeah, and we don't know the scale of that impact. If it
We
lasts
do
1
not
week,
know the scale. We don't even know the scale of the yellow impact.
Right.
I can assure you there will be things that we don't even think about, and there will be some disruption somewhere. So it will have some impact, but it is not. I don't think it's a game-changing outcome. Not in this climate.
Well, let's take some time to answer at least a few questions here, Emily. What do we got?
Yeah, great. So now we'll take some questions from the audience. So if you haven't already submitted those questions, you could type those into the Q&A box of your webinar console. We'll cover as many of these questions as time allows it. And we do have several so far. So let's go ahead and
we go another 10 minutes.
Dive in.
We can.
So Emily, do we want to go another 10 minutes just to add some questions? Maybe we should go a little bit longer. I'm going to ask for more time for the moderator. Go ahead, Emily, sorry.
All right. Has Yellow requested a government bailout? What's the likelihood that the government bails them out again?
They have tried to request government bailouts. My understanding, I think it was either the New York Times or the Wall Street Journal. I think it was the New York Times, reported that they had gone even to Bernie Sanders' office. And Bernie said that I think the comment was This was after the $700 million that Donald Trump bailed them out, that they weren't going to do anything because I'm paraphrasing.
Right.
Basically, not my problem. I don't want anything to do with this because of Donald Trump was a part of it. The White House is not going to do anything unless the Teamsters were putting pressure on the White House to do something. The White House is certainly not going to intervene. I mean, Yellow is an important company to our industry. It's a historical company. Certainly an important 30,000 jobs is a big company to go under. But I don't think the White House is going to do anything to save it. I don't see a government bailout happening. And there was a lot of noise. The Democrats have tried to investigate the Trump administration on why they gave that bailout to begin with. I don't think they're now going to give another one out because it's a lot of politics here.
Yeah, it seems counterintuitive almost, the way that they're kind of playing against that. The Democrats have come out and said we're not going to get involved with the UPS Teamsters situation either.
Well, the Teamsters have asked them not to get involved.
Okay.
There's two reasons for that. One is when the White House gets involved, you get a settlement.
Right.
That doesn't help you if you're threatening strikes.
I like that. I like that
The
perspective.
second thing is, if you're Sean O'Brien and you want to make a name for yourself,
You're doing it on
guess
your own.
guess who gets to take credit when the White House gets involved? Biden
White
gets to go
House.
out and say he brokered the deal, or his administration did.
Politics.
Sean O'Brien wants to be the guy that got the deal. He doesn't need, Daddy Biden walking in and helping him out.
Oh, man. That's why I'm not a politician.
No, it's an ugly environment.
Excellent. All right, let's move on to the next one. Could Yellow quickly consolidate all the brands and keep the Teamsters happy at the same time?
No, the Teamsters are angry. They feel like they have given up 15 years of lower pension payments and fair pay. This is a divorce where this thing has been building. Sean O'Brien's written this off, as far as I can tell, and I don't see this. I don't see happiness is not
For me, this was a prescribed move. They knew what they were doing getting into this. Once they announced the financial struggles, that started shippers diverting capacity, looking for contingencies, and that in an LTL situation is really, really, really hard to get out of.
It's a run on the bank.
Yeah.
I mean, that's what's happening. is
Exactly.
that shippers are saying, I'm not going to put my freight in their network. I don't want my freight to end up on eBay,
Right.
because that's the next step. If that network shuts down, that's where your freight ends up. You'll never get it back.
Nobody wants to hand stuff over.
All right, let's move on to the next one. Speaking of Teamsters, how are the Teamsters justifying putting 22,000 of its members out of jobs?
I was asking the same question about a month ago. I went down this journey trying to understand, because rationally, that seems sort of foolish. But let's sort of deconstruct this for a second. The Teamsters, the management of the Teamsters are not shareholders. The dues that come in from across the market, these are not businesses, these are organizations. Their incentives doesn't matter how many members they have. And they feel like that their members are not being well represented and that they got an unfair deal. And I think there's some actually sort of fanatical belief in that they need to do right by their members because Yellow has sort of betrayed their trust and Yellow is not paying them. So they're sort of willing to walk away from this Yellow agreement, is my understanding. I talked to a CEO that is in the industry who is not, who oversees another major logistics company in the space that has had just sort of an observation on this. And what they told me was the Teamsters care about two things. They care about UPS, and they care about Amazon. And they need to have some substantial wins. And having all of this sort of tension where you have unhappy employees at one company that frankly doesn't look like it's going to make it anyways. Let's imagine all of a sudden that the Teamsters that Yellow could do what it wants to do, consolidate operations. It doesn't solve the cash position. Now, one could argue that they could find an investor. Maybe an investor would come in. That's unlikely at this point in time. So it is a situation where if you're Sean O'Brien and you look at the financial situation of Yellow, you know you're not going to stake your reputation on trying to save a company that's dying. And I think that's what we're dealing with here. Plus, the pension plan we talked about
That was what they cared about.
The $36 billion bailout. But everyone talks about the $700 billion. Wait a second, there's a $36 billion bailout here that isn't getting any visibility or press. That's the one that the Teamsters really cared about.
So they did get a win in a way already. But I guess my question here, Craig, to kind of add on to that is, so you're sacrificing these jobs. Does that not give you kind of bad press with anybody that you're trying to get on board, or are you really just caring about these two large companies?
I think the situation is such that both parties, just like in an election, just like in a divorce, have their own sides of the story.
Okay.
The people who look at it rationally will say, Yellow is not going to survive. They don't have the financial wherewithal, the operational wherewithal to survive, regardless of what the Teamsters do. The Teamsters will say they did everything sacrificed over the years to help them out. Yellow will say the Teamsters destroyed the company when they went to strike, and they wouldn't help them solve the consolidation. It's two different stories. And I think ultimately, if you believe that the end game is a bankruptcy and a liquidation, and it looks like Sean certainly does and the Teamsters certainly do, then what you're now doing is building this narrative, making it very well known, we are not responsible for this, you guys did this, and you're responsible for your own thing. And I think that's what we're seeing.
Nasty.
Just like in a divorce, man. Both sides.
That's right. All right, let's move on to the next question. Could Yellow benefit, or can they file a Chapter 11 reorganization bankruptcy?
So they could. There's nothing to keep them. They have, at some would argue, $100 million of cash. Filing bankruptcy would mean that all of that debt, so the bankruptcy court gets to decide. We do not typically, I'm trying to think of the last bankruptcy that happened in trucking that was able to survive it. And the only one that I can think of was Central Freight Lines when it went to bankruptcy in the 80s, who's now out of business. But it never really thrived after that. No. So I don't remember of a bankruptcy that's happened in trucking that's ever survived it. We, think of like New England Motor Freight shut down, Central shut down. I don't think they filed bankruptcy before they just like shuttered their operations. The last time that Central shut down. I think they actually sold off the real estate. The parts are worth, frankly, a lot more, frankly, to the creditors. The real estate is actually not owned by the company. It's owned, or it's pledged to the lien holders. And so I think what will happen is the parts will be sold and the company worth. And I hate to say this, nobody really wants to take on that. You have a disgruntled membership in the Teamsters that is not going to help your cause because they're going to want a lot out of this. You have a business that's not making money. You have, frankly, rates that are inferior to everybody else out there. I would ask the question, why would you want to keep it? And I don't mean to be so harsh, but like it is a situation where what are you saving when you do that?
Sure.
All right, moving on. I got to ask this one. Will Yellow be the sacrificial lamb for a better Teamsters deal at UPS?
That's my belief.
Yeah.
And I think it's driving a lot of this. I think that it will galvanize the Teamster membership, and I think Sean will be able to go out and tell his members, if we take a bad deal today out of convenience, then we will it's not true because UPS is not Yellow, but he will use this as hey, we need a better deal. He also gets the opportunity, nobody wants to go through what we went through over the last decade with Yellow. He also gets the opportunity to demonstrate to management that he's willing to to sacrifice 25,000 Teamster membership dues for the sake of protecting the people that have those.
The way that it looks on the surface.
And the thing that we have to remember is unemployment is at one of the all-time record lows. The jobs are incredibly we're seeing a situation where it is going to be incredibly easy relative to what it's been historically for these folks to find new jobs that potentially could pay better. Their benefits are protected. We're talking about jobs that in some ways will be inferior to what they potentially could get. And I think that's a lot of what's driving this behavior.
I think it's interesting too, the UPS, Mark Solomon pointed out in his article, the last collective bargaining agreement was 2018. So we know what's happened over the last 5 years in the freight market and the labor market itself. So you're talking about labor and UPS that hasn't seen the biggest boom. They haven't absorbed that into their so maybe
It's a $100 billion company. When I was doing a bunch of research on UPS's network, I remembered it was like a $70 billion company just a couple of years ago. It's $100 billion. It's top.
So this is a huge negotiation.
It is an enormous negotiation. And remember, and there's an element of this sort of personal legacy in Sean O'Brien. The Hoffas are well known and well regarded as sort of, the sort of godfathers of the Teamsters. He wants to make a name for himself, and he's got a more combative style. I would compare him to Donald Trump's style of being a politician, which is in your face, saying provocative stuff. I mean, posting a tombstone of yellow on Twitter.
Very aggressive.
Was very, very aggressive. And I think what he's saying is, IDGAF, basically. I'm going to get what's best for my members. And anything he gets in this negotiation will matter. And the more he gets, the more credibility he'll bring. So I think a lot of that's going to drive it. And I think he'll use this yellow bankruptcy or strike or whatever you want to call it in the history as a calling card for his members to get the best deal we can.
Yeah.
Excellent. All right, looks like we got time for maybe one more quick question. Craig, you kind of talked about this earlier, but I want to ask it again. Which LTL carriers would be happy to take Walmart and Amazon volumes?
I think every LTL carrier. I mean, look, the history of XPO and Amazon is sort of an interesting one. I don't know. I mean, we do know that there was some bad blood between Brad Jacobs, at the time was running XPO, and Amazon. I don't know if that's still the case, but at one point they were XPO's largest customer and they basically pulled their business. I think every one of those companies will be happy to take it. It's volume and it pays. And everything has a price. I mean, you were in freight, I was in freight.
I priced them
Freight
both.
that we hated and customers that we didn't enjoy doing business with, there was always a price for that stuff. And so you may pay a penalty for having freight that's fugly or having requirements that you don't like, carriers don't like. There is a price to move that freight. And a company like Amazon and Walmart, there is not a salesperson selling LTL. And I don't care how much the management does not like either of those companies. There is not a salesperson that works at these companies worth anything that would not take the call from Amazon and Walmart if they call them and ask them.
You have to. You have to.
They just move so much freight.
Yeah. I mean, freight moves freight is the motto in LTL. And the amount of volume they command, even though, yes, it's not operationally people's favorite, but it's just so much of it.
And they'll probably do some consolidate. I mean, I think, Walmart's been working on this for some time. You would also believe that Amazon as well. They're thinking about their networks.
Yeah. And in a down market, the market's not.
I mean, one of the crazy things is what happens to Amazon's, people talk, is Amazon going to provide line haul services if UPS goes? Amazon has lost one of its large carriers in yellow. They got to figure that out too.
Yeah.
And not that, but also UPS's volume. I don't think they're going to have capacity to handle some of this overflow. They got to figure their own stuff out.
Even in a down market, it's a wild ride.
It is. Always supply chain. It's always interesting, Zach. This is an interesting one. Certainly always entertaining.
All right, excellent. Well, that is all the time that we do have for today. Craig and Zach, thank you as always for being here and sharing your insights with us. And a big thank you to our audience for your participation and amazing questions. If we weren't able to answer your questions live, our team is happy to connect directly. Our State of Freight webinar series continues next month, so mark your calendars for Thursday, August 17th at 2 p.m. Eastern Time. And be sure to look out for that invitation in your inbox very soon. Thanks for being here, and we hope you'll make plans to join us again next month. Thanks, everyone.